Hello everybody and welcome to Green Star Trading with me Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, for the next few minutes we're going to be looking at the SPY ETF, which is our proxy for the S&P 500. We're going to be looking at the NDQ, which is the Nasdaq 100. We're also going to take a look at the PCC, my chart specifically for the put to call ratio, and we're also going to be looking at the VIX for a little while. Okay, so first things first, we're here on the day time frame in arithmetic scale looking at the SPY. And we were talking last week, in last week's video, about having top potentially in an intermediate wave 3, looking for a correction down into a 4 before continuing higher. So, first thing I want to touch on, before we go into any deeper analysis, is the upward bullish trend that we've been in for a long time now is still intact. No major dominant low has been taken out, and the channel here is still intact, and the bullish count is still completely valid. So that's the first point I want to make. So before we jump the gun in any bearish view at all, I'm still preferring this longer term bullish count, but that comes with a caveat. There's a reason why we're going to look at the put to call ratio, and there's a reason why we're going to look at the VIX. There are warning signs that things are not necessarily as they appear. So when we receive these kind of warnings, we have to have them in the back of our mind, regardless of any personal bias or count that we have. There is warnings out there that things could be becoming fragile and potentially dangerous. So we'll press on with what we're doing, but we're going to keep that in the back of our mind. So the only reason I wanted to bring up the SPY here, because we'll have a look at this little price data in a while to see if we can make sense of it. It's a bit messy, well, very messy, is to show you that we have now brought the Nasdaq into line with the same count. But we do have some alternate counts in the Nasdaq left over from a while ago, one of which potentially calls a market top recently. Now this is the bullish count that we've been talking about. Don't ignore these up here, they haven't been placed, and this is the same idea as the SPY that we've just topped out in an intermediate 3 and now in some kind of correction. Now what's interesting is this price data here, which we're going to have to come in and have a look at, because this can be interpreted in a multitude of ways, and we have to dig our way through here carefully and consider the options, because there is the potential for a bearish reversal up here, or simply the beginning of a slightly larger correction into our intermediate 4 before continuing higher. So that's the first thing we're going to come in and have a look at. Okay, so the first thing we're going to do is we're going to zoom in on this recent price data. We're going to come down to the hour time frame, stay in arithmetic scale for a minute, and try and make some sense of this price action from the high. So there's an argument to say that this is 5 waves, down into a 1 or down into an A, with no overlap over the 1 and the 2 here to complete 3, 4 and 5, right? That's, you get me, nice and simple. There's also an argument to say that this is 1, 2, 3, 4, 5 into an A, and that this is 3 swings into a B, and that this is a short but legal C clearing the A, and that this is a zigzag. Okay, so there's another option. We then get what could be a 3-way swing, but it would have to be a zigzag. This does not make 90% of this move, and therefore can't be a flat, and the C would have to truncate beyond where the B finished if it is a zigzag. So I'm not particularly fond of that idea. Okay, so I would rather label this as the completing top, and then this is the continuation of another move down. So at this point our options are to say 1, 2, right, or A, B. Then we can start counting our way down. 1, 2, 3, 4, 5, right? Problem. We get an overlap here, and this does not work on its own as a diagonal. I've measured it. Right, this move here is longer than this move here. The 3 would have to be shorter in a contracting diagonal, and it's not. So this here is not a diagonal. Alright, so there's what I've noticed so far. So an alternate way, if we want a diagonal for an A wave, we'd have to do it like this. ABC 1, 2, there'd be an ABC in here, there'd have to be ABC 3, right, shorter than 1, 4 ABC 4 shorter than 2, and then ABC 5 is going to have to come in down here somewhere, and it's going to have to be shorter than this length 3. So there's a diagonal potential here. Right, possible diagonal. Like I said, there's a bearish way of looking at it also, which is the idea that it's an extension, and we'll look at that momentarily. So let's just label this as a diag for the moment. 1, 2, 3, 4, incomplete 5. Let's check our lengths. This is our 1. Our 3 is shorter. And let's check where potentially the limit is on the 5. Roughly where I put it down here. So there isn't much room to play with unless we come up further and then drop again. Alright, this would give us some kind of diagonal structure, a wedge structure. Excuse me, and then we would be coming down here in a series of zigzags, A, B, C. We're going to have to change this up to let's say this is going to have to be minute because of the correction we're calling it intermediate degree. These would have to be minuet, and then we can fill out the gaps. There's going to be an ABC here. Now, if you sat here saying, "Oh, I don't like this, Tom," that's fine. I've got an alternate. Just be patient. And we come up here in a zigzag, and then this will be a final zigzag, A, B, C, to complete in a 5th, and then this will give us our 1. Or our A, depending whether bullish or bearish, and then there'll be B up to here and C down further, right? So let's just label this at minor as we're in an intermediate degree. So what we're going to do now is we're going to grab all this lot, okay, and we're going to save this as diag. Right. Alright, so now let's look at the alternative. The alternative is bearish. Well, it's not a diag into an A with a B and a C for a zigzag. Is that it's an extension, and we've already topped. So the extension there is this idea here. Okay. So this time I'm saying 5 waves down here into a 1. Same swing here into a 2, as I don't like the truncation of the C here for a zigzag, and it doesn't qualify as a flat. We get a lower high, so this is just a deep 2. We get an overlap here, so this can't be 3, 4. This has to be 1, 2. So as you can see, the idea would be 1, 2, 1, 2, 1, 2, 1, 2, and we're just going to absolutely fucking implode. Pardon my language. And that will violently break down from here. So where market's going to be open in 13 minutes time, and you won't be getting this video tomorrow. So if we've gone boom like that, this is a load of crap, and it's wrong. If we've done that and we've come flying up here, then this was likely a completed A, and there's a zigzag hidden in here to get our diagonal down here, right? Because I can't just call a zigzag by saying A, B, C. Right, you understand why? Because I can't get a diagonal into this that works, this section here, and I can't get a completed impulse in here because of the overlap. So we can't say ABC here. So this is either a completed diagonal into an A, we're going to come up into a B, and then we're going to come down and an impulse in a C, most likely. Okay. Because we can't get a completed ABC here, we can't even call this W. Alright. So, excuse that, that's my phone going off, sorry about that. So there you go. It could be an extension, but if it is an extension, we expect this to break down immediately. Okay, it should not be coming back up into this if it's an extension. Okay, so there's the two options I see in the Nasdaq. Like I said, possibility of both outcomes. Still going to remain on the bullish side, expecting a larger free wave correction to play out over the coming couple of weeks as we complete an intermediate wave degree 4. If we violently continue to break down, then it's more likely the bearish case, but we have to wait to see that. So on that note, let's come out and consider the bearish case for a moment. So rather than my assumption for the moment, which is we're coming down in a 4, we're going to come back up in a 5, and the market's still bullish, let's just put on our bear hat for a moment and consider the possibility of the market having topped. Well, you're not in any hurry to short, and you're not in any hurry to short here because of the uncertainty. We don't chase price action, we let it come to us. Well, that's me talking for me and what I try to impart into our Patreon members, but how you personally trade is completely up to you. But I've seen some people calling the top 5 primary waves complete. Whether it's cycle 3 they're calling for, cycle 5 they're calling for, cycle 1 they're calling for, whatever, a larger wave degree. I've seen people calling for a larger wave degree completion. Now, if that's the case, all of this will eventually be a 1, right? So, what you've got to ask yourself at that point, if we are extending in the 1 or we're extending in an A, then we either come down here in 5 waves into an A. We're then going to get a retracement into a B, and then that's your short opportunity in the C. If it's even more bearish and it's the end of the bloody world, then all of this will be a 1 into a 2 of an A. Alright, and then this is your short opportunity. Break trend, come back, test previous support for resistance, declining volume in the counter trend move, weak momentum, and then a impulsive move and reaction, and then that will be a 3 of a 4 of a 5 of an A, right? And then if that was the case and we were that bearish, then you can kiss the March lows of 2020 goodbye. We will smash them if that's the case. And of course, no one who's never sat through 30%, 40%, 50% declines in the past will be able to imagine that happening, but it could. Alright, so if you are of the mindset and you're going around on Twitter saying it's the top, it's the end, it's over, that's the top, then you've got all the time in the world to get into a short position. You've literally got all the time in the world to get into a short position here. Because if you're calling for a cycle wave correction, it will last years. Potentially. Months, but potentially years. Okay, so if that's what you're calling for, and that's your opinion, that's fine. But we're not in a hurry to short this yet, are we? So I think the safest bet is to... I'm neutral at the moment from a trading perspective. I invest. I'm also an investor, but I'm a trader primarily, but I'm also an investor. What I've invested in long term is I've basically gone after the value sector for several years now because it's the most hated, utterly despised and crushed area of the market. Okay, I do own some growth stocks, but I've lightened positions considerably as we've come up higher. Now, I also obviously hodl crypto and I trade crypto as well, but that's beside the point. The point I'm making is I'm not going to jump into any bearish position or bearish bandwagon until I see dominant lows get smashed and market structure break down. Once I've seen that, all bears go, alright? But I'm just saying, if you are bearish and that's what you believe and you think that within a major top, then you've got a long time to get into this. So if that's the case, then you should be waiting for a completed bottom, a counter trend move before you consider shorting, in my opinion. Alright, so larger bearish case, and the count which supports it is the oldest count I've got, which was my own bearish bias from quite a long time ago, which was the completion of a 5 up here. Okay, and this is 1, 2, and now we're working our way down lower. Okay, not my preference now, but it is a possibility we have to be aware of. But we're not going to chase it. We're going to wait for it to come to us if that's the case. Okay, so no preempting here, guys, is what I'm trying to say. In the meantime, trend is intact. And if you called the market top every time the market made fresh highs, you would have been wrong an awful lot of the time, wouldn't you? Okay, so that's something we just have to bear in mind. Wait and see. So they're the two options to describe that price data that I can see: a possible extension and a possible diag. Now, I'm not going to waste too much time on this because it's a shit show. Let's come into the hour chart on the SPY. And this is a complete shit show. Alright. The only thing I can try and dig out of this, because digging out the extension isn't clear here at all. Okay, and I've looked at the ES1 as well, the futures, to try and justify it, but each subwave appears to be larger than its parent, which is odd. Okay, so if we went 1, 2, and then we went 1, 2, sorry, to here, and then we went 1, 2, for some reason the waves of smaller degree are getting larger than the waves of larger degree, and I don't like that. Okay, so I'm reluctant to call an extension pattern here in the SPY. It might be there, but with so many gaps and a bit of a mess, I think maybe the best bet we've got is to call that free wave move, free wave move, free wave move, free wave move, free wave move of a diag. Alright, something like that. Or some kind of complex correction where we've gone A, B, C, W, A, B, C expanding flat, Y, X, A, B, C, Y, and we're done. I can see that. Excuse me. Well, that's if this here is an expanding flat. I think I measured it. I can't remember now. Let's just check. Yeah, it goes beyond 90%, and this truncates. So this could be a running flat because it doesn't truncate. It's legal, is what I'm trying to say. So A, B, C to here, right? So maybe you can argue for A, B, C, A, B, C, A, B, C, A, B, C. In which case we can just say W, X, Y. I know the wave degree labeling isn't correct, but I'm just giving you an example. The issue I have with this is that calls for a completion already done. Market's going to open higher, 455.93 at the moment with 4 minutes to go. So if this is complete, we'll roar out of here, right, and go straight to new highs within the next 2 weeks, or maybe even less. Okay, and that's WXY complete. Very small, very short intermediate wave 4. It calls into question the wave degree again. If the market remains that bullish, we'd have to consider adjusting and reassessing again. But it could be complete. I have been suspecting a wave 4. I'd just be surprised if it was over this fast. Now you could say, well, why don't you go WXY into A? Because I hate doing that. Alright, WXY in a B, WXY in an X. But I don't like going WXY in an A, WXY in a C, or WXY in a Y, or WXY in a W. I just don't like doing that. I want to see zigzags, I want to see flats, and the occasional triangle. I want to see simple make up the complex, rather than just cheating by throwing complex into complex, because then you don't have to explain it. It's just, oh, it's a mess. You know, and I'm not saying I haven't done it. I have in desperation occasionally done it. I just don't like doing it. Okay, if you're going to label something WXY, then I'd like to see the subwaves of it be simple structures. Zigzags, flats, double zigzag, double flat, double combination, triple flat, triple zigzag. You get the point. Okay, so it could be complete here. If it does, it will come roaring out. So there you go. That's the SPY and that's the Nasdaq. So let's talk now about the evidence I've seen which makes me a little cautious, and that we have to be a little cautious. Okay, so the VIX first. Some nice little squiggles on the chart for you. So what I find compelling to some degree about the VIX, one thing I do not like that I see people put on Twitter all the time, it really does bug me. It's just my personal opinion, but it bugs me when people say, oh look, the VIX is getting compressed, it's getting lower and lower and lower, it's getting squeezed, it's going to pop. Yeah, well, brilliant. Well done for waiting 1,617 days for something to fucking happen. Alright, so I'm not interested in compression patterns in the VIX and them taking literally forever to play out. Alright, what I am interested in this circumstance is rising lows consistently over time. A genuine creeping up of, I wouldn't call it fear, but a certain amount of cautiousness that's building its way into the market. Alright, we've got a 60 exponential moving average in orange, which has come down to meet the 200 and has turned up all of a sudden, and the 250 has turned up slightly all of a sudden. We've got one of these so-called compression zones with a series of lower highs, which is just broken. This is all pointing towards the possibility of either a little move up, a back test, and then a rip, and a panic, right, which would obviously be supported in price in the stock market, or it could just get smacked right back down and off we go to make another series of lows along this trend line. Alright, so as I was saying, these compression patterns, I'm not discounting they exist, of course they exist, but they take forever to play out. And if you're waiting for that to play out, thinking that you can call it, you're mad, because you can't call it. You can only call it when it breaks. That's what you wait to see. It has broken. We've got rising lows, a broken downward trend. So now we have to be a little bit cautious that the bearish interpretation has gained a little bit of validity. But market structure is intact, trend is intact, and nothing's given away yet. This could just get slapped straight back down. Alright, let's move on to the PCC and my chart for the PCC. Now, I don't use the chart data, I just use a couple of moving averages to express my idea here. And the idea is simple. When the 60 crosses the 250, we come up, get resistance, come back, cross the 250, back test it, and then we shoot higher. We correct, we come up, test the 250, back, shoot higher. We correct, so on and so forth, so on and so forth. Alright, we've come up, tested the 250, come back, move through it, back test it, and now are we going to shoot higher? Now, because this pattern's played out before does not guarantee it's going to play out again, but having put in new lows and crossed the 60 over the 250 and back tested it, we should be on our guard that things could get worse, that we could move into an extreme panic or fear situation, but we could spend a fair bit of time mucking about before we do anything. Alright, so as I said at the start of the video, market trend is intact. SPY's intact, Nasdaq's intact. They have not broken down and collapsed or confirmed negative market structure yet, but there are warning signs we have to be aware of in case it occurs. And that is where I'm going to leave the video, because I don't think I've got anything else to contribute really. So if you're new to the channel and you've liked what you've seen, please subscribe, smash the like, hit the little bell notification icon to remain informed of future video releases. Feel free to leave us a comment in the comment section below if you want to. And as always, a huge thank you to my patrons. Your support is massively appreciated. And I will be coming to you with another live session on the Discord audio channel using the screen share, and I figured out a way to record everything now this time, so your contributions to the live session will also be recorded. I'm looking forward to it. I need to finalize the date, but it will be either Thursday or Friday depending on my schedule, but I will let you know on the Discord. If that sounds like something you're interested in and you haven't joined the Patreon yet, well, there's a link in the description box below. Head over, have a read of the tiers, see if anything takes your fancy, and consider joining up. Also, if you are not following me on Twitter yet, please do so. There's a link in the description box for that as well. I don't post anything on Twitter. I'm not really into chatting. I only do it to announce the release of videos, because for some reason people tell me that they don't get notifications from YouTube all the time. So it's just a backup idea. Alright then guys, thank you very much for joining me. Take care, and I'll be back with you later in the week. All the best. Bye bye.